Today we're going to go over some simple components to your trading plan. Stay tuned, we'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading, and today we're going to go over some simple components to structure into your trading plan. There's a couple of really important factors to consider, especially if you're a discretionary trader, and that's number one, to not assume that the charts are going to be predictive in nature. So what I mean by that is that they're a tool for you to use as part of your trading, but a lot of times big moves will defy what shows up in your charts, and this is kind of comes back to the maximum market adversity rule, where the market will inflict as much pain on as many people as possible to extract money from the masses and give it to the select few. So today we're just going to go over a couple of simple things in order to just have a simple trading plan. If you don't have one, it's important to just articulate in writing your approach to the market and some of the different scenarios that you'll come across in your trading, whether you're day trading or swing trading on end of day trading. And it's just, again, gives you a model and a foundation to focus on finer details as your trading evolves. So today, just going to go over a few simple things. Excuse me. I've talked about building your playbook in some of the other videos in one of the blog articles. A playbook is one of the things that Mike Bellafiore talks about from One Good Trade, and they do a daily review and they focus on some of their best A-trade type setups, and they critique and they review how that market structure unfolded leading into the day, what precipitated that best trade setup in terms of fundamentals, news, the technical layout, all these little things, and then they also review how they traded it, how they could have traded it better, what they did well, what they could have improved upon, and then the idea is to be able to identify an asymmetrical risk-reward opportunities as well, and the greater those risk-reward ratios are in terms of favoring the reward side, they also will look to try and identify the trade setups where they can take on bigger size without their risk changing by that much, and also have a greater reward value in terms of maybe 5, 6, 7 times their risk as opposed to 2 to 1, that sort of thing. So number one, trade identification. What are your major signals? So I've on the hourly system, my trade setups are very similar end of day and hourly, but my A-type setups, I've narrowed that down to 3 main setups. Now there's a couple of other ones that are sort of on the outside of that main basket, but I tend to look for the ones that I know I'm going to have a higher possibility, not only number one in terms of identifying them, but also in terms of placing my trade, managing my risk, and also the range or the opportunity in terms of the reward side of it that is going to maybe give me the best return on my dollar at risk. So identify your major signals, narrow that down to 2 or 3 really good ones. So in my case, I've narrowed that down, but I follow a bigger basket on the end of day so I can, again, get enough signals, but not too many if I'm following too many types of signals. So major signals. Now, is there any type of anticipatory signal that will help you identify that trade as it's setting up? So has there been a new break, a new high, or a new low? Is there a moving average crossover? Whatever it is how you're trading, is there some type of anticipatory signal that will help you identify that? So I run a scan on Metastock to pick up a couple of things that hopefully will help me identify my major signals, and then I can go there and look at the market to see if it fits my other filtering criteria. Are you going to pyramid into trades? Personally, I don't do that right now. I take a 1 entry size on my trade. Would I do that later? Possibly, but I'm still quite happy to just take 1 lot size of my initial parcel into that trade and then manage it accordingly. So if you're going to pyramid trades, excuse me, do you have criteria at what point you'll add other positions into the market? Is there any minor patterns that are worthy to be tradable? So I have my major end of day signals, which happen towards the beginning of the month and the midway portions of the month, but I also have a minor signal that happens on a Monday to Friday rotation that I'll usually get at least one good trade a week that sets up. I don't always get those trades, but the market, most of the time the markets will offer these signals. I call them the bread and butter trades because they show up fairly frequently. They're just a 1 day, maybe 2 day trade, but the major signals I have are more about catching a portion of that monthly ATR movement in the daily markets. So, okay, and do you have any other types of trades? Instinct trades. Peter Brandt talks about this in his book. I'm not huge on those, but there's certainly times when there's setups that don't necessarily fit the charting criteria, but it's definitely setting up into that pattern. So it's not a textbook pattern formation. You can see that the market's setting up to move, but it's not that crystal clear setup. You might be able to take a smaller position or a position into the market and still identify a level to manage your risk and your position sizing. And sometimes that will fall under the category of instinct trading. So I'm still working around that. There's days when you'll look at the market and you can clearly see that it's coiling to make a move in a certain direction, but it doesn't fit your textbook major or minor trade setups. So, trade entry then. Once you get your signal, are you doing limit orders? Are you doing market orders? Again, do you have that? We'll talk about this with risk management. Do you have a clearly identifiable way to where your maximum risk is on that particular trade, and then the percentage or the allotment of capital that you're going to put at risk into the market? So once we've got our risk management, so your initial stop. So I talk about this on the hourly and my end of day. My trades are always a maximum of 1 bar. It's not necessarily 1 ATR because that ATR may be smaller on a particular entry bar. But I know on most of my hourly charts, there's around 35 pips, sometimes a little bit more. The Mexican peso is bigger, its ATR on the hourly is larger. And then again, the daily ATRs are all different. But with that, you should be able to identify a range expansion of where that market is going to offer you an asymmetrical risk reward at either a new high or a new low, or an expansion of the range that you're trading on. So what type of leverage are you trading on in terms of your account size, what you're able to expose to the market, and what percentage of your account are you going to expose at risk? And then of course, just again, other types of risk management. So there's other ways, I don't know them all. These are just some simple ways for you to identify your entry, your maximum risk, based on position sizing, a percentage of capital that you're going to allocate into the market. I'm not big on going much above 1%. There are certain days though I'll have a larger trade size, but I'll still try to stick to that 1%. So I might have a small candle entry where my risk is a lot smaller in terms of the pip value, but so I can take a larger position in the market, but my capital at risk is still similar to the maximum amount allowed. And then management of the trade. So should that market take off the next hour, the next day, the next bar, whatever time frame you're trading? If it doesn't, has it traded against you? How long will you stay in that trade? Or should it take off right away? And if it breaks a new high or new low, do you go to break even? At what point do you go to break even? At what point then will you also move your stop? At what point will you take profits, or will you scale out of a position if you've pyramided in? All these little things as the trade then evolves. You got to be able to account for all factors of that trading process. So a lot of times, hourly trades, again, you can run into, for me, I'm in Perth, so as the New York session opens, it's heading into our night. So if I'm in a trade, I like to either have have a target already hit, or be at break even before I go into the US session, because I want to be able to go to bed at night knowing that I'm not going to get up in the morning with a trade that's been profitable and then come back during the US session and either stop me out for a loss or stop me out at break even. So I like to know that I'm either going to have no risk in the market, or even trail a stop, or take part of that trade off and leave a position in with a target in place. So whatever the market you're trading, the time frame, it's important that you have that trade management aspect accounted for. And then again, even if you're trading end of day, for example, the reason I follow more instruments is because I want to be able to get enough signals. Like, I'm really only looking for a couple of really good signals a week. So is your psyche okay to handle the patience and the discipline involved to wait for those best trade setups? Or are you impulsive and you need to be in the market? So maybe you should be trading on a shorter time frame. For me, it's whatever you're comfortable with, but your trade management process should account for that, because if you're impatient, you're going to get impulsive and you're going to take irrational trades possibly outside of your trading plan, and that's where you can also engage in other emotional activity, over leveraging, revenge trading, anger trading, taking on a bigger portion or bigger size, not using stops, moving your stops, all the things that will ultimately probably at some point lead to a potentially a catastrophic loss to your trading account. So hopefully you got some value. Review this video again a few times. Just make sure you account for those 4 criteria, and that's a simple trading plan. It can get a lot more detailed, but really the simpler things are, the less analysis paralysis you're going to have, the easier it is for you to have an anticipatory signal, place your trade orders or take a trade at market, place your stop, let it go, come back, check it when your next time frame or whatever it is in terms of how you're trading it. So thank you again for all the feedback and the positive comments. Love to hear what you're thinking below. Let me know what you're struggling with. If you haven't done so, go to my homepage for my 7-step daily routine for high performance traders. Ritualize your daily habits, focus on constant improvement, keep getting better, accelerate your learning, set goals for yourself each week, each month, each quarter, each year. Focus on constant progress, traders. This is a winnable game. Stay focused, stay disciplined, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.